Over tariffs, global markets react to the latest threats from US President Donald Trump, who said he would apply a 25% tax on all steel and aluminium imports from all countries to the United States. His increase on charges on products from China and Beijing's retaliation to that also being felt. Well, to tell us more, we're joined by Chief Market Analyst at GTC, Jameel Ahmad. Jameel, on the back of Trump's tariffs, what's the global markets overview right now, Jameel?
Well, we're seeing caution. That's because for the third Monday in a row, we're seeing more weaponization and threats of additional tariffs. Of course, that's supposedly the favorite word in the dictionary, according to the new president. And it does appear to be the case because we've seen over the weekend more threats of tariffs on steel and aluminium products, over 25% tariff. That is expected to see more details later today. That could impact economies stretching from South Korea, Vietnam, Canada, Mexico, and we're expecting to see more news as well later this week regarding something that was indicated to be reciprocal tariffs. Essentially, that means that if a country or an economy has tariffs or some sort of taxes on the United States, later this week we'll see more details on how the United States is going to impose tariffs or taxes, depending on how you look at it, on such products. So we're expecting to see more tariff news throughout this week, and it's going to remain a theme as it has done for the past month.
Okay, meanwhile, the US monthly jobs report being published, what's the outlook?
So the United States added 143,000 jobs to its economy over the previous month, slightly below expectations, which are roughly around 170,000. However, the unemployment rate held flat at 4%. Because of this, we saw quite a muted reaction across global financial markets. That could be because investors are looking at the tariff news. However, it's also likely to be the case that investors are looking at the unemployment data and thinking that this doesn't really change the outlook for the US Federal Reserve when it comes to US interest rates. And that's mainly because the Fed would not have to panic either way based on the unemployment rate remaining steady.
And as it is Monday, Jameel, other key economic data to look out for this week?
We have a number of different economic data releases. We're not only going to be watching the news flow when it comes to the threatened tariffs. We've got earnings from the likes of McDonald's. We're expecting to have a preliminary EU GDP data reading later this week, US retail sales, US inflation, and later today we are expected to hear from US Fed Chair Jerome Powell, who will give his first day testimony to Congress, where he might be pushed on the outlook of what trade tariffs might have on the US economy. He might also be pushed for more clarity and clarification on where US interest rates could be headed in 2025. So overall, I expect a lot of headlines this week, and sentiment is likely to therefore drive investor behavior.
Jameel Ahmad of GTC, thanks very much indeed.